We began with a look at the domestic economic forecast and the chief economist for Bank of America, Michael Gapen. He's here. Happy New Year to you, and it's good to have you in person.
Happy New Year as well. Thank you for having me on.
You know, a majority of voters polled by the Wall Street Journal say that the economy is going to look and feel worse in 2023. What is your forecast?
So I think that's probably true. I think we're in a situation where the risk of recession is high, may not be a deep and prolonged one, but we're in a situation where the economy has recovered very rapidly from COVID, and it's come with a lot of inflation. And the Federal Reserve is trying to slow down the economy to bring inflation down. And in the past, more often than not, that's coincided with some sort of recession in the U.S. economy and the U.S. labor market. It's not baked in. It's not for certain. We may be able to avoid it. But I would agree that the outlook by most people who sit in the position that I do think 2023 could be a difficult year for the U.S.
So we may be able to avoid recession.
Yes.
Or it could be mild.
That's right. In this particular case, I think it doesn't have to be deep. It doesn't have to be prolonged. So
we're currently at an inflation rate of about 7.1%. How long do we have to stomach higher prices? When does it feel better for the average American?
The evidence suggests we're already past peak inflation. Right now, the trajectory is a more favorable one. It will probably take 2 to 3 years to get inflation back down to levels that we knew prior to the pandemic. In other words, low, stable, and something we didn't necessarily talk about because it wasn't forefront on our mind. But it may take another 18 to 24 months, maybe 36 months to fully get us back to a situation where inflation doesn't seem to be as pressing as it is today.
Treasury Secretary Janet Yellen was recently quoted in an op-ed that she penned as saying, times can be tough, but Americans are tougher. From the depths of the crisis, we have bounced back, and the president's economic plan has bolstered the U.S. economy's resilience to today's global challenges. So that's the political plan, the fiscal spending that Congress can help them out with. Do you think on that front we are on a steady path forward? The
change that we've seen from, say, the fiscal policy side of the U.S. economy is one where industrial policy is creeping back in again. We're trying to align our public sector interests with our private sector opportunities. The CHIP Act and protecting the supply lines for chips, for example, is one of those.
Semiconductors.
That's right, for semiconductors, which is a hugely important process for electronics and autos globally. And second, the Inflation Reduction Act has many components of a clean energy policy. So I think from a medium-term perspective, we're seeing greater alignment, again, with political objectives, public sector objectives, and then private sector opportunity. We haven't done that in the United States for several decades.
In your newsletter, Bank of America's economists admit to being wrong about 2022.
It happens.
But so are the central banks, as you all point out. Central banks are about 6 months late in hiking interest rates. The Fed stands out like a sour thumb in largely dismissing the hottest labor market in many decades. So if all the experts were wrong, why should the public trust that you're on the right path now?
Public policy planned for the worst, hoped for the best with the pandemic and planned for the worst. So we didn't get the worst outcomes of the pandemic, right? Some of those that were predicted early on. But we put a lot of fiscal policy support in. We kept monetary policy easy and interest rates low. And we kind of got too much of a good thing coming out. So now we're course correcting that. So it may mean some pain for the economy in the short run. But if the Fed is successful at bringing inflation down, that means it's a very good outlook for the U.S. economy over the medium term.
With pain in the economy, I mean, let's say what that is. That's likely job cuts.
Likely job losses, yes.
There are 6 million unemployed people right now with a jobless rate about 3.7%. That's a very strong jobs market.
Right.
Where do you think that jobless rate is going to go? How much pain are you preparing us for?
Right. Part of the problem in the labor market right now is lack of available labor supply. We do think we're about 3.5 to 4 million workers short of where we were prior to the pandemic because of things like lack of immigration and early retirements and so forth. So this is why if we want to, reduce a hot labor market, cool it down a bit, it may involve some job losses. It could come in places like housing. The housing sector is retrenching. It could come in manufacturing, and it may come in professional and business services and finance and other sectors like that.
For consumers, when the Federal Reserve keeps rates higher for an extended period of time, they see the impact in their credit card statement or in the mortgage rate. So if someone's looking at the housing market, wants to go out and buy a home right now, do they also have to wait the 2 to 3 years you referenced for inflation to come down before they feel like they can afford it?
Well, housing is under a tremendous affordability shock right now. As you know, home prices nationally are still up about 40% relative to pre-pandemic times. And
it's a bubble.
Jerome
Powell said it was a bubble.
Well, okay, I would disagree with that. And mortgage rates are high. They were over 7%. They're now above 6%. So yes, I think home prices are starting to come back down. But yes, it will take time to cool down the housing market and return affordability. Is it 2 years? I don't know, but it could be 12. It could be 12 months. Could be 24 months. Yes, the housing market currently is in its own recession at present. Activity has really slowed down, particularly as mortgage rates rose.
I want to end on a positive note,
of course,
if we can. I want to ask where you see sort of the best news in 2023. What makes you hopeful?
What makes me hopeful is not just in the U.S., but globally, central banks have gotten the message on inflation. They reacted very quickly. Inflation is now on a downward trend, and we think that will continue. Mm-hmm. In the other area, I would say is I'm still very optimistic about the long-run prospects for the U.S. economy. And in that regard, what I mean is in a world where, we're pulling back from globalization a bit and we're fracturing a bit, I think the positives of the U.S. actually become more positive. The U.S. becomes a better place for investment, returns to capital, and the dollar's strength in the world system will likely be preserved. So in some ways, I think our positives become more accentuated in the current environment. So we've got a problem with inflation now. We will likely risk recession in 2023. But beyond that, I think it's still a very positive outlook for the U.S.
All right. Thank you so much for sharing your outlook.